Hello traders, in today's video I would like to offer a step-by-step analysis into a silver trade I took during the week using my trading strategy. This video will be much detailed than my usual trade reviews since I've decided to be more patient in my delivery by offering you an unadulterated and a natural way of performing my technical analysis without holding anything back. Without wasting much time, let's quickly hop onto the chart and get started. So, as we can see here, we are on the silver daily chart, and at the top right corner of the chart, I have listed some key points that should guide us through our higher time frame analysis. In this case, the daily chart, before we drop down to the intermediate time frame and entry time frames to look for our entries. But before we go through these key points, I must state that I took this trade on the 18th of March, and as such, I would like to use the trading view bar replay to send us back to that time before we continue with our analysis. So the first point to note here is to identify our market trend. So as you can see here, at this point, the market has been making series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and this is telling us that we are in a bullish market trend. The next thing on the list is to mark out our dealing range, and with a dealing range, we are looking at which range has currently taking sell side and then buy side liquidity. And as you can see, this point becomes our dealing range low, and this also becomes our dealing range high. So you can see that price swept sell side liquidity into this daily in state of delivery or order block. So we'll mark that out. And then after reacting to the daily order block or change in state of delivery, there was an expansion away from it, which led Tuesday sweeping buy side liquidity here. So this becomes our dealing range low, and Tuesday becomes our dealing range high. So we'll mark that out with our fib to clearly show us our premium and then discount zones. So the next thing on the list is to locate our PD arrays within this dealing range. So let's mark them out. So here we have a daily internal range liquidity here, and at the discount zone too, there is a tiny internal range liquidity here that may be difficult to identify, but it doesn't matter how small the daily internal range liquidity might be. So far as it fits into the right conditions, it may serve as our key point that markets may react to. So we mark that one also out. And with my strategy, you know that I trade internal range liquidity to external range liquidity or vice versa. And then since we are in a bullish market trend and we are looking to go bearish, we are looking at trading external range liquidity here or old highs to our internal range liquidity. Now this is against the trend, and most traders advise trading with the trend but not against the trend. But when you know what you are exactly doing or looking at for in the market, you can trade either ways and still be profitable. Now the next thing on the list is our weekly profile. So with our weekly profile, since we are looking at trading bearish, the question is which day of the week is going to become our high of the week in order for us to trade lower. And as you can see here, the daily Tuesday candle is showing us that the Tuesday candle can become the high of the week. Now, I use the word can because at this point we are not confident that the Tuesday candle will actually become our high of the week. So we drop down to the intermediate time frame to look out for our reversal signatures to tell us that price is actually reversing off the Tuesday high. Now, as you can see here, there is this minor range within this major dealing range. And with my previous video on understanding dealing ranges and choosing the right PD array, I made mention of the fact that there are times you can also find a minor dealing range within a major dealing range. So if you are looking at trading this reversal into our discount zone, we are expecting that after price swept this dealing range or the minor dealing range high, we are looking at it should reverse back to this low. So this low here becomes our immediate target. Yes, our immediate target because we are it falls within this daily internal range liquidity, and no one can actually tell whether this daily internal range liquidity is going to be disrespected. So the easiest draw on liquidity on the daily chart here is this swing low that we find here. So you cannot just target this daily internal range liquidity at a discount zone because this daily internal range liquidity residing at the premium level here, price can react to this level and then actually go higher without coming to our discount level. So this can also happen in the market. So always try and then create the easiest draw on liquidity. So at this point, we are going to draw to the 1 hour chart and then look or find out whether the daily or Tuesday candle is actually becoming the high of the week. So we are on the 1 hour chart, and to tell whether price is reversing off the daily charts or daily or higher time frame key level, we are expecting to see a market structure shift and the inversion of a key fair value gap. Now, as you can see here, we have our market structure shift here, and this is our daily fair bullish fair value gap that sent price higher to raid our buy side liquidity over here. So immediately we come back and then disrespect this daily fair value gap. I am very confident that price will be going lower. This is in the sense that if we are going higher or we are in a bullish market condition, we are expecting that bullish PDR rates should be respected and then bearish PDR rates should be disrespected. So the moment price respected this daily, 1 hour bullish fair value gap to read buy side liquidity, and price came back to disrespect this particular bullish fair value gap, I am very confident that the market is set to reverse or go lower. So at this point, this is where we mark out our inversion fair value gap here. We mark out our 1 hour inversion fair value gap. So this is where I took my entry with my stop loss somewhere here, and then I targeted our minor range low, So it provided me a 2 hour trade, and it was a very cool trade. Now I held this trade for 2 days, that is from the 18th to the 20th of March. Now I could have dropped down to the 5 minute chart when price came back to the 1 hour inversion fair value gap to look for sniper entries. But as I always say, when you are able to determine your higher time frame bias supported by your intermediate time frame market direction, you can use any other lower time frame chart to serve as your entry chart. So I was confident here that the pattern that has formed on the 1 hour chart will be enough for me to trade lower. So there was no need for me to drop down to the 5 minute chart, since the reversal signature that I'm looking for had already presented itself here on the 1 hour chart, and the target was going to provide me a 2 hour trade, which I always preach about. You don't need to go for any extreme high risk to reward ratio. Just a 2 hour trade will be enough for you. All you need to do is to stay consistent and apply a good risk management strategy. So let's play our bars, and then let's see what happened with this trade. So as you can see, there was a consolidation around the inversion fair value gap and our change in state of delivery here before price started expanding lower. So at this point, market has reached almost a 2 hour. So I took 50% of my position at this point and then moved my stop loss to this swing point here. That is where I moved my stop loss to, and then allowed the rest of the trade to continue. So as you can see, at this point, the markets nearly reached our draw on liquidity but started reversing. But I wasn't scared, or I wasn't worried, because I had taken major of my position out and I've reduced my risk also. So there was no need to be worried about this trade. All I needed to do is to sit down and then relax. So the market finally came back to our draw on liquidity, and that was a very cool trade. That was a very cool trade. And I must say, I called this trade out on my Discord channel from the very day it was taken to when it hit our TP. I called it out on our Discord channel. So I just stated that just to make you understand that I'm not just cherry picking trade setups, but I actually trade all these setups. I also took a gold trade looking at the way the silver was behaving, since silver and gold are correlated. But that gold trade, I was able to secure 50% of my position at 2 hour. The entire trade was a 3 hour trade, so I secured 50% of the position at 2 hour and then moved my stop loss to break even, and I was stopped out at break even. So I didn't actually lose. I gained some profit with that trade also. Now I believe you were able to grasp a thing or two about my trading strategy from this trade review. The channel still remains AK Trades, and always remember to like and subscribe to receive the latest updates from this channel. Good luck and stay safe.